What's up, YouTube? Eric here, Mr. Fired Up Wealth. After partying all night, Chuck Norris doesn't throw up. Chuck throws down. That's exactly what we're going to do on this video today. Some real talk. Now, I could come on here and I could show you all the different calls that we've made that have been spot on since 2022. I've been trying to bring content to retail investors, to individual investors, trying to educate you on the stock market and how these cycles work. I started investing in the 1990s, and I've seen several cycles like this in the past. Now, those who kept investing in 2022 and using that DCA, dollar cost average methodology that we teach in Fired Up Wealth, using the Fired Up Wealth discipline, that portfolio, that blueprint management, having diversity in your stocks, going after secular growth trends, thinking long-term, 6 years and not 6 months. If you've done that, you're very happy right now. So the market is running hot. AI is the hype. Anything that's related to AI, especially if it's large cap or mega cap tech, it's going up, it's going up, it's going up. Now, if you didn't buy, you have basically Fomo, fear of missing out. I wish I would have bought this price. I wish I would have bought this stock. It's really hard when the stock prices are going down, because you're never going to time a bottom. Now, human psychology, basically our brains are wired that we want to be right every time. And it's very painful for you if you buy a stock and it goes down. You want to buy a stock and have it go green and have it go basically up every day for the rest of your life. That is not how the stock market works. And I've done several real talks like this telling you that you basically just have to have patience, discipline, and conviction in what you own. Understanding what you own, doing that homework, and knowing that stocks are broken sometimes, but the companies aren't, and that they'll recover someday, and that the market overall is looking at 6 months and 12 months, not 6 years and 12 years. If you follow that approach and had that mental fortitude, had that discipline, you're very happy with your portfolio right now. And the bonus to that is you don't have to worry about chasing stocks at crazy levels. You don't have to worry about trying to buy NVDA now that it's run 150% year to date. You don't have to worry about buying MRVL Technologies that we just talked about 3 weeks ago. That's up 60% in 3 weeks. We just did a video 3 weeks ago literally saying buy Marvel $40 or less. And you can go back and time again, these stock prices have worked out very well. Not always perfect. Sometimes we say it's going to go to level, it doesn't quite get there, or maybe it goes lower than we thought it would go. But if you're using that DCA approach, buying different buckets, buying price levels, using technical analysis that we teach in Fired Up Wealth, you're very, very happy right now. So what do you do if you're sitting on cash and you didn't buy last year, you didn't use that DCA approach? Well, now you've got a problem, because what do? Do you buy prices here? I would probably recommend not doing that. But at the same time, where do you buy a stock if it's already run really hard? Having that blueprint, that psychology, that discipline is critical in bear markets. It's something that I tried my best to teach you guys over the past year, and really even the past, almost 18 months it's going on now. Now, I'm not calling a bottom. I'm not trying to be cocky or overconfident, but I'm coming on here today just to give you some thoughts about the market and just some thoughts about what's happened over the past 18 months. And human psychology is a powerful thing. And with YouTube, you're going to be wrong sometimes. And of course, people like to focus on those times you're wrong. You could have 100 stock picks or 100 ideas. If 2 are wrong, people are going to focus on those 2 things. You're going to get all the credit if something's wrong, because people want to blame you, a scapegoat. They don't want to take responsibility for their own decisions, their own actions. If they're right, they're going to take all the credit. They didn't get help from Fired Up Wealth. They would have done that on their own. They're geniuses. I get it. That's how the brain is wired. One thing I'll say is, if you're in the Fired Up Wealth community, if you're in Patreon Discord, you had a great understanding of what was going on with the market for the last 18 months. You had a lot more confidence and conviction in the stocks that you were buying, and knew the reasons why you were buying them, and didn't know exactly where the bottom was going to be or when the stocks would recover, but you knew that with time it would happen. You had an appropriate time horizon, 5+ years, long-term investing. And if you're not in our private community, I invite you to join us, Patreon Discord. You can go to patreon.com/Fired Up Wealth. The Nasdaq's up 2% today. S&P's up over 1.15%. Dow Jones is up almost 1%. You've got stocks like ACLS, all-time highs today, $160 a share. Up 450% since we bought in Discord in 2021. Have there been mistakes? Absolutely. You're not right every time. And that's what we teach about investing in Fired Up Wealth. And that's why I have diversity in more than just a couple of stocks. You're going to be wrong sometimes. You're going to be wrong about certain stock picks. You're going to be wrong about certain price levels you buy. But if you stay consistent and disciplined, you will be rewarded with time. It's just impossible to know exactly when that is when you have a bear market and when that recovery is going to happen. You know, the VIX today is down 7.26%. It's at 17.75, and we still have debt ceiling issues lingering. You know, we just had some inflation data this morning, came in a little bit hotter than expected. The market still, it just doesn't care. It wants to go higher. S&P 500 right now, guys, is at 4,200. The beginning of the year, we talked about, you know, how the first half of the year would probably have some volatility. We said to have some cash, expect some opportunities, especially in individual names. We definitely have gotten some great buys. There are still a few stocks out there that I think are still buys even at these levels. And we said in the back half of 2023 that you'd probably have a rally. Well, you're getting it really in the middle of 2023. Is this sustainable through the end of the year? You know, probably not. But are we going to have a sell-off next week, you know, 5 or 10%? Or are we going to go 10% higher and then sell back to the levels we're at today? And this is why it's really hard to buy when the market's ripping, especially when stocks are going up, you know, 20, 30% in a single day. I like to buy stocks when they're on that downturn. People say, you know, I got a lot of heat in 2022. Why are you buying stocks in a bear market? Why are you buying growth stocks in a bear market? Why are you buying stocks that are falling knives? Wait till they recover. Okay, well, when do you get in? Is now the time to buy NVIDIA now that it's gone up 150% year to date? Or what are you waiting for? This is stuff that you don't get taught. Personal finance is not taught in school. It's something that we teach for free here on YouTube. Make sure you subscribe to the channel and click that bell for notifications. This video probably won't get a lot of views, but the people that do watch it are the ones that I want to see it. The ones that have been loyal followers. We've started this channel in May of 2019. Over 4 years, I've been making videos on this YouTube channel. We started our private community Patreon Discord in July of 2020. That's going on 3 years. We've built a community from the ground up, from zero. And it's the best investing community on the planet, hands down, no question. So I'm glad that you're part of it. Even if it's just the free subscription to YouTube, you're in the right place, and we're going to continue to find opportunities, secular growth trends, and outperform the market over time as long-term investors. So right now, it looks like the market wants to go a little bit higher. It's ignoring all the macroeconomic risks, but that could fizzle out anytime. And I think if you're buying stocks, you have to look at individual stocks at specific prices and kind of buy against the trend. So last year, everybody's buying dividend stocks, throwing growth stocks in the trash. Now, large cap growth going higher and higher. A lot of these spec stocks, dividend stocks are being thrown out. So you look at like an Enphase. I like that stock, 155 or less, preferably less than 150, but even 165 or less, DCA, probably a good long-term investment. No guarantees, but decent chance. Airbnb, under $105, even better, under $100. There's several other names out there that you could be following, lots of different spec names that are still beaten down that could be opportunities longer term. You really have a cycle with the market. Semiconductors generally lead both directions. They lead on the way down, they lead on the way up. Large cap tech, that's safer, that has good, cash flow, cash balance, strong balance sheets. Those type of stocks do well first, and then you have, follow through and lag with the other sectors. It's a big cycle. And so spec stocks still aren't in fashion, really. You think of like a SOFI, a STEM, there's a bunch of them, right? We talk about stocks like even INDI. INDI's done really well if you're buying it at our $6 price target. There's still opportunities with these small caps. Rocket Lab's another one we've talked about a lot. Palantir, we covered Palantir before it even came public. And we like that stock, $9 or less. And, it's one of those things that was pumped on YouTube, next $1 trillion company. Now it's back to $14. Well, do you buy it at 14? Why not buy it when it was 6 and 7? Because you didn't have conviction, because you didn't do homework, because you didn't understand how to build a portfolio. You didn't have the psychology, the discipline, and really the financial education to be successful in a down market. If it's easy, everybody would do it. And you get rich by buying when everybody else wants to throw it in the trash, when there's blood on the streets. But it's really hard from a psychology perspective to buy when everybody else is selling. And now your brain tells you should buy because everybody's buying, but I think you have to be careful, especially with specific names that have run really hard, really fast, and are probably ahead of themselves. Now, with that said, I said this morning, we do live stream every single Monday, Wednesday, and Friday in Discord. This morning, I did a live stream, And I basically said, you know, when a stock goes parabolic, it's impossible to know where that top is. A stock like NVIDIA could top out here. It could go to 400, it could go to 500. You're seeing price targets just last year, October, that stock, NVIDIA, was $108. Price targets were at 80. Now I'm seeing analysts coming out with $600 price targets on NVIDIA after it's already run 150%. So where's the top on that? Who knows? The thing could go up another $100, $200 before it has a sell-off, or it could sell off 20% tomorrow, and I wouldn't be surprised. So if you're sitting on a lot of cash, I think you have to be selective with the names, but make sure you build out a blueprint. If you don't understand what I mean by blueprint, join our private community. I've got a tier in Patreon. Again, it's patreon.com/firedupwealth. There's a masterclass tier. That's going to give you 13 videos. It's over 12 hours of content, basically teaching myself everything that I've learned over 20 years investing. If I was teaching my 20-year-old self what to do and what to not do, that's exactly what those videos do. We also did, 15 videos this year in Q1, a conference series. So we did a conference series in Fired Up Wealth. We actually had members from the community join. You can watch those videos. There's something like 30 videos in that tier that you can watch right now, get a better understanding of the market and just what to do, how to build a blueprint. Build a blueprint that fits your needs, your risk tolerance, your suitability, your timelines. That's the first step to be successful. What you're going to build your portfolio, what's going to be in it, what your risk tolerance is. A bucket for dividend stocks, a bucket for growth stocks, a bucket for ETFs, for spec, for cash. And every person's going to be different. So you get a lot of drama online, buy this stock, don't buy this stock. It really comes down to the individual. When I make videos on YouTube, I'm trying to bring information to help you with your decision, but that decision is ultimately yours to make and yours alone. I'm not here pumping stocks, telling you should buy or you have to buy exactly what to do. I'm telling you some possibilities. I'm giving you opportunities, and I'm giving you information to help you with your decision. But the intent's not that you watch a video and just go buy a stock tomorrow. The intent is to get information and do your own homework and do additional research and make your own decisions and build your own portfolio that meets your needs. So again, if you're new here, subscribe to the channel, click the bell for notifications, check out Patreon, Discord, join our private community, give us a try. Patreon.com/firedupwealth. Make sure you drop me a like and a comment. Have a great weekend. The market is closed on Monday, so we're going to have 3 days off from the U.S. stock market. Enjoy Memorial Day. Remember what Memorial Day is all about, and have a great rest of your day and a great weekend. See ya.